Good day, guys. Welcome to Forex Walker. Welcome to episode 62. On this episode, we'll be talking about the decisions that we'll be doing on the fourth quarter. Here we have the WTI crude oil, and it's showing signs of rejection as we expected towards the closure of the year. We're expecting a bull run in the direction. As you can see here, the lowest low that we had is right here on this red line, and we broke the 50% feed right here, and we came back to reject to below the 23.6 green line. So that's here, and we're expecting a takeover in this price action projection. This is the 23.6 feed, and but this is not what I called you for. This is the Shanghai index, SOE's index. I use it to trade the Australian dollar. It shows me the future of what will happen, which in this case we have a break of the previous high into in the exit of recession. So this break of the previous high. But the Australian dollar is actually still supposedly about to move towards the 23 towards levels below the 23.6, which may not happen. So we're still waiting for a pullback before we buy the Australian dollar. This is the go ahead from the volatility index that seems to have calmed down a little bit from this market manipulation on the red line, that which I will remove. We expected a market manipulation from the first touch, second touch, the third touch normally manipulates, and we're expecting the market to break the previous low, which is this orange line here. We're expecting it to break the previous low towards the closure of the year. And with, of course, those agreements, the refusal of Donald Trump to send those Tomahawk missiles to Ukraine, refusing to Zelensky, the president of Ukraine. So it seems to us that things have calmed down, and with the Chinese government agreeing uh, to come to the negotiating table, as the Americans have asked. So things are calming down, and we're expecting the global market, including the global supply chain pressure index, to push the markets higher, and the JPY to continue to collapse. We did not forget about the base rally in the pound SGD, the rally, the base that moves sideways, the base, and the rally that follows after this, which is a replica of this bull run. We're expecting that replica to take off from this side, which is this rally. So we did not forget about this, even though it's a negative carry on the long side. So we did not forget about this. But at the moment, we have macroeconomic context on the pound, that the pound will be collapsing. For those who are trading short term, they can actually take their short positions from here. I don't know where they will have the feed, where they wish to have the feed, but this is let me remove this guy. This is the 50% feed. The market reached the 50% feed, rejected to the 23.6, which I don't believe it will go that high, because at the moment I'm pricing in the sales on the pound in the name of macroeconomics. So we'll basically look into this, and we'll try to catch it from all the way down there. Remember, my intentions are the expectations on the weekly time frame. This is the daily, but the weekly time frame is the weekly trend line where I'm expecting the first touch, the second touch, the third touch. I'm expecting it to manipulate, and I'm not uh, saying no to that. This is that weekly time frame trend line that I'm looking forward to being manipulated, and that is something that I've been looking into. And I will hold that negative carry, but I'll try to hold the same negative carry in the CAD and other currencies that give me positive carry instead of negative carry, well, just to avoid the SGD. So I'll be looking forward to that. It might happen towards the closure of the year, even next year. So I'm a patient man and I'll be waiting for this trade. The Euro NZ, the NZD is something that I've been talking about, and it looks to us that it has actually taken over. We've been talking about this trade for some time now. Uh, at the moment, it's telling us that it is taking over. Remember, I told you that the JPY trades don't need to drop below the 23.6, which is the the green line for the normal previous shoulder. They don't really need to go there because of the huge economic divergence in the global booming economy with the JPY. So this is the takeoff that we have. We we actually went below the previous. We actually went to find equal lows here, and the market is taking over. But I don't really trade price action. I trade macroeconomics, and the market is taking over in the actual direction, which is a short-term move. It might reverse from here, or it might take over into the following month. But I'm expecting it. I'm not expect. This is not a long-term trade. I'm expecting it to reverse not that far from here. So I'll be looking forward to holding this trade. Another way to hold this trade is with the Euro NZD. You can actually go short in that direction, and that's another way that which you can hold this trade. You can have your feet and get that last pullback and drop lower. But the drop will not go that far, especially because I don't trust the euro. The euro goes bullish sometimes with the volatility index. Both the euro and the CHF are a little bit correlated. So when I'm buying the CHF, I don't expect the euro to collapse. So sometimes, uh, the macroeconomics is telling you that the euro will collapse, but the euro is an index. So what is happening in Europe with all European currencies will affect the euro, even if macroeconomics is telling you that the euro is bearish. But when you see the CHF pumping like that, you might as well look into your loans. That's just how I trade the euro, but I normally trade the euro with the correlation with the Danish krona. That's how I trade the euro. This is the CAD JPY. We talked about this trade on the previous episodes, and the flip zone that we were looking forward to rejecting. Remember, I talked about the JPY process that JPY trades don't really need to reject all the way to 23.6 or below the previous shoulder. So we looked into the flip zone, and that's how we caught this trade. And I believe it will continue to move higher, but this is not a long-term trade. It's a short-term trade. Once you get to the previous high, you might as well move your stop loss all the way up there and prepare yourself to liquidate, because if you don't prepare to liquidate, the market might reverse into your profits, and that's not the best way to trade. This is the EuroCAD, and the EuroCAD is doing exactly what I was expecting it to do. And the CAD will not be bearish, will not be bullish for that long. So the direction of the trade is bullish. I was expecting it to give me some kind of a tiny pullback to this previous shoulder here. You remember how I trade? I trade the previous shoulder, and I expect the market to reverse to the previous shoulder and drop, but it did not do that. It just continued with the smallest lot size that I held, and I'll just keep it that way, especially because I don't trust the euro. So I'm not taking any huge positions in this trade either. This is the euro pound, a trade that we talked about for a long time in the past. So we actually held the trade all the way down there, believing that this was the 50% feed, and we expected the market to continue to move lower, but it did not. So this happened while the market rejected again, where the market manipulated the previous shoulder, and it went down. But because at the moment I'm pricing in a collapse on the pound. Remember, when we buy the pound, we buy short. But because I'm pricing in a collapse in the pound, we're going to have something like this, something that moves higher or something that moves sideways. So it might move sideways that way, but we're expecting that sideways move unless if the euro collapses all the way down, then our sideways move will actually move uh, will be a downward sideways move. The pullback on the euro is not a long on the pound. The pullback on the pound will not be prolonged as much as that of the euro. So we're expecting, as you can see here, it looks like the pound is gaining, but it's not really gaining. This is just a tiny pullback, and the pound will collapse. So uh, my expectation is that I'm not. I'm believing that we might get something like this again, and my intentions is that when I buy a currency, I expect it to break the previous low, come back and break the next previous low. But when it returns to manipulate the previous shoulder, I don't expect to be buying that kind of a currency. Yeah, even though this is a good signal, I don't expect the 50% feed to be hit twice and the market reverse, but that is all price action. I'm looking into macroeconomics, and I don't feel okay uh, selling the euro pound. I don't think the euro pound is prepared to be sold towards the closure of the year, and I'll be doing the buying of the pound, I believe, next month, but not this month. I don't believe the pound is ready to be sold, and that's part of the reason why I'm not going to be selling the pound. So these are the trades that I'm looking into. I enjoy trading the euro pound, but for now, I'm not. I believe that I'll be liquidating the trade, and the volatility index is not going back there. Most of the time, the volatility index will destroy your trade only if you are trading JPY crosses. But if you're trading both high risk currencies, the pullback will not be that big. Part of the reason why you don't see a spike, an unusual spike here because of the spike in on the volatility index, because both currencies are getting weaker with the spike. You don't the spike or the collapse in both currencies give you they provide you with a shock uh, that to a point that you don't really see that much of a pullback because both currencies are pulling back. So thank you guys. I'll see you on the next episode. Goodbye.